Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And tonight, we're talking about stock market investments are going down. Oh my. What is there to do? Do you have a plan? Let's talk about it, and welcome. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. We're going to talk about it. The stock market has been going down. There's been a whole bunch of FUD going on. If you're watching TV, if you're watching the newspapers, if you're watching the magazines, if you're listening to the talk show, radio, YouTubers, stock market, you would think there's a crash happening. But anyhow, it's all about investing tonight, ladies and gentlemen, whether it's the stock market, whether it's real estate, whether it's crypto. It doesn't matter. It could be watches. It does not matter. It could be cars, whatever you think an investment is, a home, multifamily properties, whatever you think an investment is, it could be going down. But I have news for you, ladies and gentlemen. What they don't tell you in order to scare you, it's pretty simple. You make money on your investments when you buy. You already have a plan, and it's across the board pretty much. You know, if you buy a home in a certain neighborhood, you expect the price to go up at a certain rate. Just like if you buy a home in a lower end neighborhood, you don't expect the price to go up as fast as in a luxurious neighborhood. The same thing when you buy cars. All cars generally go down in value, but if you bought an expensive car where there's only like 5 on the planet, then that car might hold its value a lot more and possibly go up. Or if a car costs a lot of money and only a few people again have them, then the car may go up. But for everybody else, cars generally go down. They just might not drop to a certain level. But all that is taken into consideration when you bought the item. Whether it's real estate, whether it's cars, which are not investment vehicles. But the point I'm trying to make is whenever you buy something, you have already set your expectations, but you don't realize it. So when you're going to buy a cup of coffee for $8 or $7 at Starbucks, you rationalize and say, oh, it's only $7. It's only $5. Another person would look at that and say, hey, I could be using that money to invest. So it all depends on what you're going to buy. And that's what's happening right now. Stock market's going down, so they say. We're going to look at some numbers. Housing prices going down? I don't think so. So you guys know how we do this here. And I want to welcome everybody here. And please share the videos. Let other people know that we do have these videos going. And it's members only chat tonight. So if you're trying to chat and you can't, that's because you're not a member of the channel. Only members can chat tonight, but everybody else can watch and listen what's going on and see what we're talking about. All right. So I'm going to put a few things on the screen tonight and we'll see what's happening. But first, let me welcome Wilson Koo with the icon next to his name. Good evening to you, sir. Glad to see you here this evening. So the first thing I'm going to do is put on the screen. I'm going to go to the housing market. All right. Hello, everyone. Let's rock. Victor Marrero is in the house. Thank you so much for being here on the Wednesday Night Live. Hello, fam, too. Wilson Koo. That's right. So I'm going to go into, we're not going to talk about stocks right now. I want to show you something. After we had a year where there's a pandemic, after we have a year where businesses have been lost, businesses have filed bankruptcy, businesses have went out of business, yet the housing market, you would think people wouldn't be able to afford new homes. But you have to think about this. The federal government reduced interest rates to make them attractive. But not only make them attractive, but when you reduce interest rates, that allows people to buy more home, or rather a more expensive home than what they previously could buy. And at the same token, a person who had a 4% or 3.9% interest on their loan, they could refi the loan. And now, because their house went up in value, they could take out more money. So that counts as another loan. You have a lot of things going on here, ladies and gentlemen, so we can trick the algorithm. All right? So let me get this on screen for you. I got to take off the comments so people can see. Let me go full screen. So you can see this is the housing market year over year in December. This is incredible when you think about it. When you start with 2020 in December and go 2019 December to 2020 December, and you're talking about a 13% increase, ladies and gentlemen. 13%. And in fact, they started tabulating it. What do they go through? March 20th through January 2021 on Realtor.com. And look at this. This is incredible. The first 2 weeks of March alone, the listing prices increased 4.4% year over year. Just in March. This is insane. You would think, out of all the jobs being lost, everybody not out of work, you think people on Zoom calls, not even thinking about buying homes. Well, guess what? People are buying homes. The April listing last year went up 320. So I won't get into all of these. I'll have, in fact, I can put a link in the description. Come to think of it. Rare moment. I'll put the link here so whoever watches this after can get the link and they could actually go see it for themselves. And it's quite surprising when people are saying how bad the economy is, how bad it's looking. This is quite striking. And it just goes to show you that sometimes just because 50, 60 million people are out of work, prices still rise in certain locations. And I just want to illustrate right here for the last time. You got to look at this here. Home prices increased in every region, and December's national price increase marks 106 straight months, ladies and gentlemen, year over year gains. That's like 9 years. 9 years. Do you hear me? 9 years. Year over year increase in home prices. Anybody getting a raise every year? Year over year, you're getting a raise of 10%, 5%, 3%, 12%. You can't keep up with the home rates. But this is also why a lot of people say a home is a good investment. But is it really? You guys know my argument about I don't believe a home is a good investment. But that's why they give you the illusion, in my opinion, that a home goes up. But you are paying for the home the whole time. It's not like a stock where you buy it for $10 and then the stock goes up to $100 and you just pay $10. A home is like the equivalent of me paying $10 and then paying $2 a month. And then 2 years later, you say, hey, Eric, I gained $90 on my house went up $90. And I'm like, didn't you just pay $2 a month for 2 years? So it's the illusion that the house went up. You're actually paying for it. So that is where I have a problem. And now we have people who believe that they should buy a house, get a new loan for a house because the interest rate is so low. So what are we talking about? This is crazy. The reason why I had to illustrate this is because this 2020 was the worst year almost since, in fact, the Great Depression type scenario, with the amount of people out of work, with the amount of businesses that have vanished. But yet, home prices have increased. And you know what else is interesting? I'll get into the next one. The stock market. That's even more interesting. You would think, and I'm not going to get into the history of the stock market year over year, but what I'm going to do is, if you don't know by now, all of the indexes in America, the Dow Jones, S&P, and NASDAQ, this is the futures market for tomorrow, they're all at all-time record highs. Who would think that from last year? You know why you could think that? Because things move in the stock market. So when people lost their jobs, it was kind of common sense that people would go on Zoom calls. When schools started closing, it was kind of common sense. People are going to be on Zoom calls. That's the way of the future. So once again, people took out from the stocks such as cruise lines, travel industries, and things like that, and invested in type of stocks that will rise when there's a pandemic. And that would mean tech stocks, because people are going to be on their computers, need iPads, need computers, need any peripheral that goes with it. And there you have it. That goes. Then you find out people are like, well, I need some of this green energy stuff. So now we have the play into electric vehicles, artificial intelligence, those rise. So it spawns a whole new era where people can move into different stocks and it still rises. And then, of course, the manipulation of the indexes, when you could remove companies and add the brightest star onto the exchange, then that changes the equation as well, which Tesla got added to an exchange. GE, who's been on the exchange since like 1900, got removed because they weren't performing good. So what happens? The markets keep going higher because we're taking away some of the losers and adding some of the winners. Manipulation, plain and simple. So again, are you really losing? Are you scared? The top 10 percenters, don't be scared. So anyhow, tomorrow already, here's the futures for tomorrow. The Dow is down 39 points, S&P down 9, and NASDAQ 43 as of right now. But of course, this will change all overnight. But again, this is minimal. It hasn't even dropped enough to be significant yet, ladies and gentlemen. A crash that everybody's talking about, well, see me when it drops 20, 25, 30% like last March. That's a crash. This little thing about going down 300 points, 1%, 2%, at this rate, it'll take a full month of it going down every day to be a crash. And in the meantime, there's some other stocks that are still going up. Because that just proves once again, if you buy at the right time, everybody who bought EV stocks last March, April, May, June, July, you're still sitting here well in the profits, 3, 4, 5 times your money, even right now, even after the correction. Marijuana stocks, when we talked about it 5 months ago, when I did a video, same thing. If you'd have bought them then, you're still good. Even after it's dropped 50%, you're still good. So we can sit back and watch for the future. And we got to hope the economy gets better. And I got to thank Texas because they opened up their markets, which also means other states are going to follow suit as well. Even though that could be bad for coronavirus and victims of coronavirus. But they went ahead and opened up the state. So that should help out some stocks in about in the next 20, 30 days. And let me know what you guys think. Because the other thing coming down is we still waiting on that next stimulus package. It's going to be huge. All right. Let's see what we got talking about tonight. Curtis Davis is in the house. Mr. Financial, welcome to the Wednesday night live stream. Thank you so much for being here. Pam Archibald's in the house. Thank you so much. Good evening to you too. I appreciate you being here. Tanisha Lyles made it today. Hey, fam, bam, glad to be here. Don't forget to hit the like button. Oh, thank you so much. This time I'm 15 minutes in and I did not say smash that like button, but thank you so much for posting that, Tanisha Lyles. That helps out greatly. I appreciate it. And of course, I have this link in here to where I was talking about the real estate, so you can go look it up yourself eventually. Later, after this live stream, you can go see for yourself. It's all happening. Same in Canada. Prices are rising on detached homes and condos are flat. Exactly, Wilson Koo. It never changes. And the people, you guys got to understand something. You do understand. Here's the thing you have to remember. 10%, the top 10% of the wealthiest in America, you have to consider they own 92% of the stock market, which is a lot of wealth. So if you know the top 1% owns 50% of the wealth, doesn't it make sense that 1% is only 3 million people? Think about it. Don't think too hard. So then if you think about the top 10% owns nearly 60%, 64% of the wealth, it's not too hard to start figuring out why they can still buy homes. They can still invest in businesses. They can have a lot of other options that you or I may not have. All right. So now when home prices or interest rates decrease, they step in and take advantage. When stocks go down, they step in and take advantage. That's why the wealth gap continues to get wider, because they're not spending their money, so to speak, for it to go up. They're telling you to go buy a house. You're spending your money on a house. Meanwhile, they're sitting there putting their money in the stock market, and they have gains of 100% in a week, which a house will never do. Meanwhile, you're struggling while you're paying your house note, and they're sitting there going, here, I got some of this. You guys know how I call it. Paper. It's thin air. They're investing in paper that goes up 30, 40, 50, 100% in days and weeks. Meanwhile, they're telling you to buy a house that goes up 12% year over year. I think that wealth gap's going to get a lot larger. Let me know what you think. Exactly what's happening in Canada. Nobody's immune for this. No country is immune from this. People who are in the UK that's watching this know exactly what I'm talking about. When they went and did what America's doing now, reduce the interest rate, that allows the wealthiest, they can go and pay more for a house. So if you thought a house was $500,000 and that's expensive, they could say, well, you know what? I'm just going to outbid you. I'll give $700,000 because I only have to pay 1% interest or 1.5% interest. So downtown London right now used to be families live there. Now companies and corporations own those homes, and they're $3, $4, $5, $10 million. Nobody can afford to live there. Corporations own them. It's craziness. So in America, same thing's happening. There's a wealth gap. So while they're doing one thing, they're telling you to do another. Canada's no different. Curtis Davis manipulating numbers. Exactly. Eric, did you get additional info on that new Punta Cana project you were talking about next to Coco Bongo? Yes, Victor Marrero. I did. The 2 bedrooms are all sold out. All they have are 1 bedrooms left, which is fine. But that's all there is. There's nothing more about it. Just so you know, since you've been there probably, I'm sure you have, it's less than, what did the guys tell me? 1 minute walk to Coco Bongo. And he said it's 20-second walk to the Marriott. So that's how close it is. It's very close to downtown. So there are some units available, but all the 2 bedrooms are gone. All that's left are 1 bedrooms. And luckily, though, I didn't realize when they sent me the message that everything was pretty much sold out. That was only the first phase. So they're going to send me over the list when the next phase comes out. And not only that, it's even worse than that. They're keeping it in-house. The broker is keeping it to himself. So like my favorite real estate agent, Andrea Rodriguez, she doesn't work for the broker that has that 1 bedroom downtown, or well, there are 2 bedrooms too, but she doesn't have the listing. Her brokerage doesn't have the listing, and the brokerage isn't sharing. So you're going to have to go through Apartments SD. So what I'll do is, I can't leave it on here right now, but I'll after the video, I'll probably post it down below, but the link. In the other video, I think I have the link, but that's the only way it's going down. Have to go through these guys. They're not sharing, and they don't have to. And also, I should say that 57,000 or 50, whatever, that actually was not a 1 bedroom. They have it listed as a 1 bedroom, but it's actually a studio. That's why it was only 300 and some odd square feet, because I was like, how did they get a 1 bedroom out of it? They didn't. It's just a studio is what they're talking about. And then the 1 bedroom escalates. 1 bedroom was like I don't remember the numbers exactly, 121 or 117. It escalated real fast. And a 2 bedroom was what, 150, 170. It escalated, 199. I just can't remember the numbers off the top of my head, because I was looking at some other things as well, because after he said that the next phase will be out, then we'll see where it all sits. But I love the location. I think that's even, for me, it's even better than my beach location that a lot of people know about. The beach, to me, is just, I was speaking with somebody else about this. To me, it's for people that is on vacation and who wants to stay right there at the beach, but the beach doesn't have much to offer other than the lagoon. That's it. After you remove the lagoon, they don't have anything else. So that's when I was there, and the lady said, well, they're going to have this out back, that over there, that over there. And I was like, well, where's your master plan that shows this? Because right now, all I know is Vista Cana is the only one that has stuff everywhere. So I think they were feeling a little pressure, because Vista Cana has all these services and everything going on in their project. Meanwhile, at the beach, all they have is the lagoon and nothing else. And so I was just kind of like, that's kind of, and you could walk to downtown, but the 1 bedrooms downtown turns in, there's 2 bedrooms as well, but those are going to be hot properties. They're Airbnb friendly as well, by the way. So that won't be a problem. You can Airbnb them. They're right next almost to the Marriott, because he says it's like 20 seconds to walk to the Marriott. So that means it's right there. So that's the perfect location. And for anybody that hasn't been to Punta Cana, the Marriott is literally 100 yards away from Coco Bongo. There's a field between Coco Bongo and the Marriott right now, but one day I'm pretty sure there's going to be something built in between there. But right now you could literally walk 100 yards and you'll be at Coco Bongo, straight line. So that's how close these 1 bedroom apartments are. They're on the corner, so they're equally as close. That also means, and I also saw some projections for where Coco Bongo, the Dolphins experience is, and all that. They're building some more restaurants around the water, and they're making that aqua park a little bigger. So they have a water park right there. So that's why I was getting ready to say, there is no reason that I should get something at the beach at this point, because a person could actually have that condo walk straight across the street and still get this almost the same experience. So anyhow, that's it for that 1 bedroom downtown. So we'll see how it all plays out when they release the second phase, but I'll be on the list for the second phase. And in fact, Victor, you can hit me up at eric@stopstrugglingnow.com, and I'll just shoot you over the guy's WhatsApp for it. Or you can go look it up online, but either way, that's what's going down. BOC is cautioning people about buying now, as the jobs are not stable since the economy is still struggling. Exactly. That's exactly what it is. Ordinary citizens should not be buying anything, but ordinary citizens who have a job, they are. But my thing about this is, even though everything is going up, I'm thinking one day is going to come when all of a sudden they start evicting people, the forbearances go by the wayside, and now you have millions of homes that are in foreclosure, and you're going to have millions of people possibly on the street. It's going to be very bad. So that is the interesting thing. So we'll see what the year over year is going to be next year, but that is what I fear. And the bad news is if that does happen, they will not reduce the interest rate. They'll raise the interest rate for new buyers. So a new buyer could have a 4.5 interest rate because the economy or housing market's in the toilet. And then now you pay a higher mortgage payment instead of the reverse, which is what's happening now. People can buy a $600,000 house and their mortgage payments are low. So that's what we have going on. Wait for economic crash, then buy. That's my philosophy right now. In fact, I don't even have a philosophy for real estate, because when stocks are going down, real estates are going down, your investments are going down, you have to have a plan. And my plan right now, my investment is in offshore, Punta Cana area, where the world goes and visits, and I'm going to turn mine into vacation rental. And although I can live there too, but that's not my main focus. My main focus is for rental income where the rest of the world comes and visits, regardless of what's happening in America. So that's why I look at it that way versus buying a house in America. That doesn't seem like a viable option at this point. You should be buying like a multi-family properties if you can at this point. But again, you're going to be at your own risk, because if you're in a state where a person doesn't have to pay rent for 6 months until June 1st or July 1st, like in California, then you're going to be on the hook for all the rental monies and possibly everything else. Water bills, electric bills, it's still your property and the bills are coming to your location. So those are the kind of things. But that's what if I would buy real estate again in America, I would wait until whatever happens shakes out. And some people may be saying, but Eric, the housing prices are going up. That's right, but the housing prices are going to crash. And here's the thing. So think of it a couple of ways. So the housing price is going to crash, just like normal. This is a normal thing. And then the price is going to go back up, but you're going to have a higher interest rate. So just like now, you can go back in history, the interest rates, you'll have like, let's say a 4.5, let's call it. I don't know if it'll be that high, but let's say it's 4.5. Then when the economy gets stable, and of course, there's going to be a downside. So they're going to start reducing the interest rates again. So you'll be able to refi, and then you have options to either refi for the amount you owe or refi for the price that the home value went up and take some money out if you want. But now your payment's going to be lower. So you'll have options at that point. The same people who had options when they bought a house in 2009, 2010, 2011, all have options right now over the last 10 years. They could have refied by now. They have probably their home went up $100,000, $200,000, maybe even more. So those are the kind of options you want. And that's coming up, I think, later this year. The Dow recovering. Of course, we know how it works. I think the Dow is going to recover because not all stocks on any of the indexes are catered to just one sector. So if the EV sector goes down, okay, great. But what does that have to do with like the rocket ships, artificial intelligence? What's that have to do with Zoom? What does that have to do with Visa, Square, everybody doing PayPal, doing transactions? So that's why I like what the media and everybody does about the stock market crashing, which a crash I consider 30% drop in a few weeks. I don't call it 2%, 1%, for a month, 2 months as a crash. You can make adjustments at that point. It's when you wake up and it's Monday and the stock market's at I'll use today's thing, 31,000. And then by the time 4 p.m. arrives, it's at 25,000. That's a significant crash that nobody can prepare for unless you're already prepared, like a lot of you should be. I expect the market to go down. That's just the way it is. It's going to recover like normal. Richard Reynoso, welcome to the Wednesday live stream. Glad to see you here. Good evening. All right. Interest rates may go up, But if you leveraged in too high, the amount you were paying can still go up and knock you off as renters are not able to pay for your property mortgage. Exactly. That's true. That's very true. Airbnb income and DR, insulated income. That's the way I look at it. And I'm pretty sure Victor's over there too. Remember, I bought at Canada Bay Galaxy in front of Hard Rock. I was just looking at getting another property. Yeah, I know exactly where you bought, Victor. That's exactly. You bought one of the premier locations. I was looking at that Canada Rock. I wish I would have found it when you did 2 years ago, because I would have been in a Canada Rock property on Hard Rock, on the Hard Rock parcel as well, because they do have a couple of things over there, and they all ended up with a nice scenario. Because just like I was saying, with real estate, it's always about location and being able to have the golf, being able to go directly to the beach, and you have the security, you have the casino, you have shows, you have the powdery sands that you can go to, your own private location. There, you can't replace that. And whenever you can rent, you're in a luxurious area, so you can rent for a higher value than I'll be able to rent at Vista Cana, for instance, or for that matter, for almost anywhere in the Punta Cana area. And the same if somebody had something in Cap Cana, you'll be able to rent higher than in most places because you're in a more upscale luxury location. And the Canada Rock guys, they did a hell of their plans, their buildings are very nice. So, yeah, I remember. And that's exactly what I was thinking too, Victor Marrero. When I saw it, I was thinking picking up another, even though I have two already. I was like, this can't be true. Downtown, that is significant. They have nothing directly downtown, literally 100 yards to Coco Bongo. There's nothing except the Marriott now. So I was just like, man, what an opportunity. Even though it's a plain and simple thing, it's nothing fancy, but the rental rates you'll be able to get, because the grocery store is right around the corner. And around the corner means I could walk there in less than 3 minutes. So it's a win-win. So if I was going to get anything, that's the one that I was looking at when that popped up. And in fact, what you don't know, which I didn't even talk about in the video, there's 2 more projects in that same area downtown, but they're by different builders and they're not even on the radar yet. They're not even being built or sold yet. So I'm waiting on those too. I want to find out, because if they're going to sell something under 100 grand near downtown, I want in. I'm going to tell you that like it is, because now you don't even need a car at this point. You'll be at for everybody, nightclub, entertainment, bars, restaurants, swimming, aqua park, and you can go to the grocery store in less than 5 minutes. No taxi needed. It's beautiful. So those properties should be higher priced than what they are, but it escalated. The 2 bedrooms got up there. I think they were, well, you bought something for 200 grand, so it's not escalated to you, but that 50,000, and then they went up to like 200,000 because there's a rooftop penthouse as well. And the penthouse, they're talking about putting like a pool up there, or a mini pool, a real one. And I was like, this is crazy. And they have lockers up there for them as well. It's crazy. They're charging like $23,000 to add on the terrace on the penthouse. And then you'll get the lockers. You'll get like a pool. You'll get like this green area. It's awesome. So that was the one that was probably 200 grand, but it was up there. All right. Let's see. They cut the stimulus check to people below 80K per year. No surprise there. The one last year was if you made 70K, something like that, then they started reducing it up to 90. So I expected that. And probably should be by rights. If a person makes in America, they know the numbers. They know how many people actually make 80K and under. It's a significant number of people. It's like 70% of the population in America. They just don't want to tell you that directly, but you know the numbers. So that only leaves out like 30% of the population. So they already did the calculations. They know the top 10%ers are taken care of. So all they're looking at is, okay, 70% of the population, they'll get stimulus. The top 10 percenters, well, they don't need stimulus. So all we're really talking about is that little 20% of people who are well enough, 80,000, 100,000, 120,000, you're good enough. You don't need any stimulus money. So no surprise on that cutoff. I'm monitoring real estate market closer. I'm pulling the trigger on another property this year. Victor Marrero, exactly. Let me know, are you pulling another property in Punta Cana or a different location? That's the question. Me personally, I'm not even messing with anything in America because I fully expect the market to crash big time. I think we're going to be at 2008, 2009 levels. Well, maybe not as low, but I still think we're going to have a 30, 40% type correction on the housing market in certain areas where there'll be plenty of opportunities. But my thinking is I want to have opportunities at a lower price point, such as Dominican Republic, while the getting in is good. Because once the American market starts going down, then the rest of the world, instead of investing in America, they'll be coming over to the island too, trying to get in because they know that now we can get unabated rental income because coronavirus will have subsided by then. I'm pretty sure the shots, vaccines will take effect. So now the rest of the world is going to be visiting and we'll be able to get our rental income for life. That's my prediction anyhow. We'll see what happens. But this is part of what I want to talk about tonight, the investments. We make plans going in. So we already know, for instance, let's just say for the sake of argument that even in our, me, Victor, Richard Reynoso, all of us doing the Punta Cana or any other offshore is what I call outside of America investing. That's a risk in itself. There could be hurricanes. There could be even earthquakes on islands. Anything can happen, but it's a calculated risk because the way they build buildings there are all cemented. They're not like how they do in America where somebody can have a mobile home in a hurricane alley. That's kind of crazy. So, but it's a calculated risk. If you know that generally that's the top tourist destination is Dominican Republic. If you know that, and then you have a piece of property there, and you know tourists are coming in from all over the world, what do you think is going to happen if there's a downturn in tourism in America? Instead of coming to America, they go to the islands. Instead of going to South America, where Argentina's having a problem, where Venezuela's having a problem, they might go to the islands. That's what the calculated risk is. And if they didn't go to the island, we're still going to be fine because there's such a thing as Airbnb, VRBO, and all these other rental opportunities that we can use. And if worse comes to worse, then I just go live there for a little bit. So either way, it's a win-win. All right, Dow recovering. That's right, Airbnb. Let's see. Many new investors have over-invested in tech-only stocks, diversify. Yes, exactly. Exactly. Because it's always been, you got to get on the bandwagon. Whenever the going is good, tech was good. They have been good. There's a reason for tech. But as we talked about, there's other sectors. And my favorite was the electric vehicle sector last year. Artificial intelligence, cloud storage. All these are different sectors. Now we're talking about rocket ships. Space rockets. And by the way, all members of the channel tonight, I might as well tell everybody, I invested in a SPAC today. It's VACQ because it has to do with Rocket Labs. They merged with Rocket Labs. That's Vector Acquisition Corp. So, and of course, the SPAC is around $13 right now, $12. SPACs are kind of getting beaten down a bit, but it was, I think $13 is what I bought it at. So, yeah, it was around $13. That's all I remember. Whether it was $12.95 or $13.06, I can't remember. It was fluctuating, but I think it was $13. I'm pretty sure $13.06, $13.07, somewhere in there. But anyhow, the point I'm trying to make, we know we're trying to go to space, and these space rockets and SpaceX and these type of companies, satellite companies, again, diversify. That's why we always talk about different stocks, because we just can't be in one space. The world is going to change. Solar panels and the chip market, all this is going to be needed, and it's going to change. So, in fact, let's go here. I'll show VACQ. I think that was it. I'll show this one today. Here we go. Yeah, see, I'm already down. Look at that. Yeah, I'm pretty sure I bought it 1306, something like that. So we're down 50 cents a share already. But it's okay. This is long term. The plan is already in place. That's why I made this video tonight. Are we going to worry about this little short term? We know that they have, in fact, Rocket Labs has contracts, government contracts in the pipeline already. That's what's so interesting about this. So I'm kind of surprised. But again, the merger's happening. SPACs have been getting beaten down. But at 13, I thought it was worth it. And who knows? Maybe we'll have to, if it drops to like 11 or 12, maybe if it drops to 12, then buy some more. But again, long-term play, because that's going to be in the space industry, and there's going to be rockets needed, lots of them. And as far as I know, there's not too many companies that make rockets. All right. Let's see. Yes, Eric, bullish on real estate and DR. That's right. Tech is getting a correction, apparently. That's all that's happening. Nothing major. Yes, other sectors available. Mark, space, Gilat. Exactly. Exactly, Curtis Davis. Yes, heard about that today. Yup, exactly. VACQ. Solar is going crazy in China. Of course it is. China has patents. That's what people don't really realize. China has patents on solar panels. So this is why there's some of this pushback in America, that people don't understand why there's pushback. It's because they're holding patents. And in America, we don't want to act like we can manufacture anything anymore, and instead want to buy panels from overseas instead of make them here, which would be much better. And by the way, speaking of that, lithium, don't forget about lithium, nickel, uranium. That's right. That's right, Tanisha Lyles. I didn't forget about your uranium. That's right. All this is for batteries. All this is going to happen. Nobody's going to stop this robo-taxis and drones and new cell phones coming out. None of that's going to be stopped. So you might as well jump on board. So if the tech is going down, then we have other areas we invested in as well. We can live with tech going down, because investment is not based on short term. You should never think short term. Don't think like you're doing day trading or swing trading where you need to do something the same day or the next day. Short term, think of things that you invest in. Is this going to be something that the world could use? And if your answer is going to be yes, then that means no matter what the price is today, what's the price going to be 2 years from now? That's what you have to think about. It's long-term investing. All right. And speaking of investing, anybody who's new here, please go down in the description. Get your free money. Get your free Robinhood Webull shares of stock. All you have to do is download the app. Robinhood, though, they want you to link your bank account before they release that free share of stock. But you don't have to deposit any money. On Robinhood, all you have to do is download the app and link your email, and then they'll give you a free share of stock in about 48 hours. All right. So that's simple. Then we have crypto. Get your free $10 from crypto. That's down below in the description as well. So we'll keep that going. And speaking of investments, we got crypto to invest in, right? So we're going to talk about crypto real fast. What happened with crypto? So the stock market dipped a little bit today. I'm going to put the crypto up here so you guys can see it. Let's see what happened with crypto today. Now, some of you may say, hey, how come Eric doesn't know what happened with crypto today? Well, because this is long-term play. We're not looking at what's happening with crypto today, next week. We know what's going to happen with crypto. We knew when it was $9,000 crypto was going to go up. We knew when Ether was 345, Ether was going up, and we gave reasons why. The reasons I'll reiterate now. When I did the video on fintechs are using the ERC20 token that runs on the Ethereum network. All of a sudden, all these fintech companies are coming out of nowhere. They're running on Ethereum network. So clearly, Ethereum's going to go higher. Simple. It wasn't like any other technical analysis. It was just kind of common sense. So it went from 345, and then it hit its peak at 2,000, 2 weeks ago, and then it went back down to 1,500. So let's go look and see what's been happening. So now it's back to 1,600, and Bitcoin went from 55 down to 45, 46. Now it's back to 51. The people's money. I'm going to use Mr. Financials, Curtis Davis's lingo. The people's money. I like that. All right. So again, people think Bitcoin is worthless, that it's just electronic, digital, whatever. Here's the thing. No matter what you think about what it is, my point to everybody who is in disagreement about crypto is, well, that's real nice, except there's one little problem. You have been sitting here saying crypto's no good. Meanwhile, people invested in crypto when Bitcoin was, let's say, $10, when Bitcoin was 100, when Bitcoin was 300, when Bitcoin was 1,000. All those people who invested are potentially millionaires if they didn't sell. Because if you bought it for $300 and all of a sudden it's 3,000, you might have sold. Or when it was 10,000, you might have sold. But the point is, if they did nothing and listened to these people who say, well, crypto's nothing, I'm like, yeah, but these guys were able to make money, not from anything they had to work for. They just had to make a risky investment. And that's what investments are. Investments are risk. So the fact that a person said, well, Bitcoin is 9,000, when I did the video, 8,000, 9,000, and Ethereum was 345, and I'm sitting there saying, hey, buy this now. They thought I lost my mind. They were like, crypto's garbage. It's not going to go up past these numbers. And now here we are, less than a year later, and the numbers are astronomical. Nobody knew that this stuff would do 5 times or 6 times for that matter. And it did. Both of them went up to 6 times what they were just less than like 8 months ago. So all I'm trying to illustrate is investments are a risk, and you do investments based on calculated risk. You're not just going to willy-nilly. You're not willy-nilly doing investments, right? There's a reason you want to put your money somewhere, and you're hoping that you're making the right decision based on other factors. Like I said, when we sat there that night and I was running the fintechs and I said, you're running the ERC20 token, we should get Ethereum. It was like common sense to me, but other people were like, oh, no, all this is trash. And I'm sitting there going, people are making money from this. And you're sitting there telling people not to do it. I understand that it can crash later. Everything can crash. Even the stock market can crash. Housing market can crash. Everything can crash. So I don't understand this talk. But my point is, ordinary citizens, they don't have to invest $50,000. They don't have to invest $1,600 in Ether or $50,000 in Bitcoin. You can invest $300, $20, $50. And if these things double, your money doubles. You didn't have anything to do with it. You're not working for it. And anytime people can make money while they sleep, while they're at work, while you're on vacation, then what is wrong with the person taking a chance and a risk? When I invest in the stock market, it's a risk. When I invest in real estate, it's a risk. Any investment is a risk. All right. So don't let anybody talk you out of it. It's only money. You just have to make more. And that's what a new video I have coming out tomorrow is going to be on, streams of income. And it's only based on what we can do without spending money. It's the usual, your social media, some outlets that you can use, like I'm using StreamYard tonight. You can do Instagram lives, Reels, TikTok. I mean, you have all these outlets that you can sell products, services, your knowledge. Turn it into monetization. Monetize yourself. All right? So I just wanted to show you this right here because right now there's a lot of FUD about Cardano. A lot of FUD about Cardano, but this is very interesting because Cardano, just even a month ago, look at this, a month ago was only 42 cents and people have been beating it down. And in less than a month, it's doubled, almost tripled. So anybody who believed in Cardano even a month ago has tripled their money, didn't have to do anything other than believe and put their money where their mouth is, right? And that's not the only one. So I'll get into like Polkadot, for instance. Here's one that we've been talking about ever since it was like $23, right? So Polkadot, $23 at one time. I can't get to it. Oh, here we go. All right. So, and I'll go, well, I can't go back a month, but I'll go back a month. Look at this. A month ago, $20. I was wrong because we were talking about it 2-3 months back. But the point is, Polkadot and Link, again, people have to understand you're investing in something for a reason. Okay? So if you know what they do, then you can say, okay, this kind of makes a little sense. That's why their prices go up. All right? Now, if anybody's confused about crypto as well, we can borrow against crypto. Soon as they said we can borrow against our crypto holdings, that should have told you a lot. So you can go to Salt Lending as long as you have what, a 600 credit score, is it? Your business, 600 credit score, 1 year business, and whatever you have in crypto, they'll give you up to 70% loan against it. Right then and there, no qualifying, no credit check, no nothing, just based on your assets. So this is why you should invest in things like assets. Property is assets because you can borrow against it. Crypto asset, you can borrow against it. Stocks are an asset you can borrow against them. All right? So those are the kind of things you have to think about. So don't let anybody talk you out of something, and all investments are a risk. No, all of them. Not one is not risky. They're all risky. But the thing is, if somebody said invest in Apple versus invest in some new altcoin, well, then that wouldn't make sense. Why would you invest in a new altcoin you know nothing about instead of Apple? You would invest in Apple. But how many people thought Hertz rental car company would go out of business and file bankruptcy? Nobody would think that, but they have. So that's what I'm talking about. Everything is a risk. So don't put anything down. Always think about, is this investment for me? That's what you have to think about. All right. Let's see. They have whole offices running on solar in rural areas and getting power from solar. Exactly. That's what I'm saying. America's behind. People think that America's so far ahead. They're listening to the hype. We're behind. That's the problem. Play long term. Exactly. Didn't steal shares of RKT, but it was sweet 50% in one day. That's right. Curtis Davis. That's right. Members of the channel who's under the community tab, they know when I bought Rocket, and they know it was under 20 bucks. Yeah, like I said, I can't really remember the number, but I think it was around 17, 18, or $19. It was one of those. And I specifically know me and Curtis Davis was talking about it in the chat about it, and I said buy. So, I mean, it's up to, well, let's go look at it. What is it up? 38, 40 bucks, whatever. Let's go see what RKT is. Oh, it's back down. It dropped today. Whoa, it dropped 32%. See, that's like a crash, ladies and gentlemen. But because we bought at 17, 18, 19, we're still ahead. So we can live with this 30% correction. So I don't mind it. But it was up to 40, wasn't it? Like yesterday? Let's see, where was it? Yeah, it was up to 41 or 40. Yeah. It dropped all the way down to, 32%. But hey, again, investment is based on what you invest in, right? Here it is. It was $41.99 yesterday. And then today it's $28.01. All right. So now you have choices to make. Are you going to buy more at this level or just sit with these 17, 18, 19 or less purchase price? That's what you have to ask yourself. Yeah. It's down. I don't know what date it was we were talking about. I'm trying to find it. But there we have it, $28. But we're still ahead. Even at 17, 18%, it's not 100% yet back to that. But, but some people could have sold when it went up to 40. I didn't, because I don't really like selling, quite frankly. I like holding. All right, Tanisha Lyles, get excited about the Space Hotel coming from. That's right, Tanisha Lyles. Thank you so much for mentioning that. Orbital Assembly Gate Corporation and Gateway Foundation is already in talks. Exactly. She's on top of it. In fact, Tanisha Lyles, just so everybody knows, I got that from TechCrunch yesterday or the day before. I saw that. Thank you for mentioning that, because that's part of the research of why you have to think about space. They already have the Space Hotel. It's happening. It's going down. It's not a figment of somebody's imagination anymore. Bitcoin, a store of value. Hey, that's what they're saying. I have friends been buying since 2016, didn't sell. Oh, yeah, beautiful. Beautiful. They got in when it was on, what was it, 300, 350, something like that at the time in 2016, 2015. Yeah, that's crazy. Cardano getting some action. Exactly. Driving to work is a risk. Exactly, Wilson Koo. That's it. Wilson Koo, that's so true. Exactly. That's what we're talking about here. The Wall Street bets pumped the stock, but RKT paying special dividend. Yes, they are. I like it. I like it. And I hope they got some money as well. I hope they did some sort of direct purchase agreement with somebody. But they'll be fine. I'm not even worried about them. They're all being corrected because there's this, the funny thing is, once the big timers, the top 10 percenters get beat at their own game, now anything that Wall Street bets does, the establishment's going to try and squash it. So you're going to be in for a nice little ride for a minute, but they're like, nah, we're not going to let these guys get bigger and badder. So I'm not surprised at this type of movement, but it was shocking that it went up to 41. I was quite shocked myself because I anticipated what's basically been happening. Movement of, I didn't think even 40% a year was going to happen. I just figured 10% to 15% per year. This is stock markets like any other in history right now. We're having these wild swings, and you got to love it. If you're an investor, you like volatility like this because you can make lots of money if you sell at the right time or buy at the right time. So that's what we're talking about tonight. Let's see. We're 58 minutes in. Please smash that like button. And if you like what we're talking about, please subscribe to the channel. Now, let me get myself a little drink tonight. All right. So on the Wednesday Night Lives, we don't talk too much and too long. So you'll have to come back on the Friday Night Lives where we talk about a lot of stock plays. And everybody who's on Twitch tonight, welcome. All right. I put in the Twitch instead of Twitter tonight, I think. So welcome to the live stream. All right, ladies and gentlemen, let me know if you want to talk about anything else because I'm going to wrap it up. Wednesday nights, we don't do 3 hours. We only do about an hour, a little over an hour. So anything else anybody wants to talk about, that's pretty much it. So use the links down below, please. And the last thing I forgot to talk about was the crypto. So since we're talking about crypto, I forgot about Celsius Network. There's a link down below. If you deposit or send over to Celsius Network $200 or more, then they'll give you free $30 of Bitcoin. The link's down below. There's also BlockFi, who gives interest on coins as well. So that's the thing about Celsius Network and BlockFi. If you hodl crypto, they give you interest. So while your money's sitting there, you get interest earned every day. Celsius gives you interest earned every day, but they give it to you every Monday. BlockFi, you earn interest every day, but they don't give it to you until every month. But here's BlockFi. They now have come up with a rewards card, rewards Visa debit card, 1.5% cash back in Bitcoin. I have the link down below in the description for the waiting list because it's a waiting list right now. And you can go sign up with BlockFi and earn interest on your Bitcoin or Ether or other coins as well. But right now, Celsius Network generally gives you the higher interest rates, whether you're USA or international. So you might want to go check them out. I highly recommend it. Use my link down below for Celsius Network. And yes, I am ambassador of Celsius Network. All right. And I like what they're doing. Now, the bad side with all these companies is they're holding my money just like a bank. They're holding my crypto like a bank. But I'm earning interest. So I figured the best guess, the best investment, I'm leaving with them because I'm earning like on my crypto at Celsius combined, I'm earning over 10% annually. I'm almost at 1% a month, which I'll take that all day, every day, considering there's inflation. And the inflation is good for us in crypto because that means the crypto will also go up a little bit every time the inflation occurs. So now we get more money on our crypto and we get more interest on our crypto because the crypto goes up in price while they're holding it. You got to love it. And then, of course, I have a link for Nexo down below. Nexo's a little different. They give you a little less interest than Celsius Network, but your interest is compounded daily. The interest you earn tonight will be in your account tomorrow. And so that means your account, if everything was equal, if you had $50, let's say, and the interest was 10 cents, then you have $50.10 that you're going to earn interest on today. And it just keeps compounding. So that's the difference. But Nexo gives a little bit less. I mean, I'm talking about it could be 1 percentage point, 0.5 percentage point less, but they give you interest every day. All right. So Nexo link is down below as well as if you joined us late, the free shares, the free stock you can get from Robinhood and Webull's down below. And of course, how can I forget? Some of you don't want to risk making any investments. You'd rather have somebody else do it for you. Well, we have you covered. Wealthfront is down below. There's a link for Wealthfront. As long as you deposit $500 or more, they will manage the money for you. Manage the account for free. As soon as you get up to $5,000 in the account, then they're going to charge you a management fee of 0.025% annually. All right. But from 500 to 5,000, they manage your money for free. And that's set it and forget it. You don't have to do any investments. They do it for you. All right. That's the simplest plan you can go, or you can go with plan 5. You could say, I'll just put my money in an index fund. All right. And of course, I say a few every now and then. Vanguard, because they have the lower fees. And we can talk VTI, VCR, VOO, VTSAX. You can talk about ARK funds, ARK Invest, ARKK, ARKG. We have ARKX out, which will be the space fund. I'll be investing in that. So, and they have a few others, but you can go to arkinvest.com and go check them out. All right. So hopefully you guys understand what this live was about today and understand that any investment that you do, you make money going in and you already have an exit strategy no matter what happens. You could say when this goes down. So I'll give you a perfect example of an exit strategy, which is not really an exit strategy. It's just a plan. So you may have heard me talk about velocity stocks before, like a TVIX and my favorites, TVIX, UVXY. But there's also like SQQQ, things like that as well. So for the index funds, there's also velocity stocks. When the stock goes down, when the stock market goes down or the index goes down, stocks go up. All right. So what I do is I hedge a little bit and I invest in those stocks, velocity stocks. So when the stock market goes down, those tend to go up. So I invest a small percentage in those stocks because they don't really go down so much as the opportunity knocks. So if there's a correction of 30%, let's say just what happened last March, you could have been holding UVXY that you bought at like $8. And at one time it went all the way up to 120 in less than a week. So you would have offset that 30% drop from your normal stocks. You would have said, wow, okay, I'm still fine. You wouldn't have to panic because you have the other side of the equation as well. The same with TVIX. And TVIX is much more volatile. And that went from, you could have bought it at $30, $40 a share. It went all the way up to $900 a share. Not saying you never know when you're going to sell. Something you buy for 40, are you going to sell it 300, 400, 500, 700, 800? When are you going to sell it? It's hard to hold something after you only bought it for 40, 50 bucks and it's at $600, right? But I'm just letting you know, at least when the stock market was going down, we're making money on the other side of the fence. And then if you know that the stock market will recover over time, then you really had nothing to worry about all along. So that's the bottom line to that story. So hopefully you guys understand what I'm talking about. I'm going to end this tonight. We're at 1 hour and 6 minutes. So please smash that like button. If you like what we talk about, please come back to the Friday Night Live where it's going to be even more. We'll have even more gems being dropped and people in the chat are going to be dropping them, not me, because Friday night we have a whole bunch of gems that are dropped that could change people's lives. All right. So I want to thank you all for being here. And again, since this is a members only or chatting, I want to thank you for being a member of the channel for another month. Thank you for your contributions. And I want to thank you for your support. All right. So again, please share the videos and please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. That's why I started Stop Struggling Now. And if anybody ever has any questions, you can always hit me up at Eric@StopStrugglingNow.com. And I'll try to respond to you within 24 to 48 hours. Or you can leave comments down below any video, and I still try to respond to everybody. So again, think about what you're going to put your money into, but you're going to have your money working for you while you're sleeping. Because otherwise, if you're going to have to keep working for the money, then you might as well just put in a lifetime of servitude because you're going to have to work until you die. All right? So with all that said, keep your head up, keep moving,